Chicken wing restaurant Wingstop debuted as a public company on the Nasdaq on Friday. Its IPO priced at $19 per share, but shares soared 60%, now trading at just over $30. There you see it. And its CEO Charlie Morrison joins me now from the Nasdaq. Hi Charlie, congratulations.
Thank you. Thank you. Great to be here. It's a great day for Wingstop.
Yeah, and at $19 per share, you're offering some 5.8 million shares. That nets you just over $110 million. So tell us what you're going to do with all this money.
Well, certainly our shareholders are with us on this, and then we are really going to use these proceeds in the near term for an opportunity to deleverage the company, pay down some debt, and for other corporate purposes.
And some of that money goes to your private equity firm, right?
That is correct.
All right, now your IPO priced in the range of $12 to $14 initially. It was raised to $16 to $18 earlier this week, and then again at $19 last night. So what do you think is driving the excitement from investors?
Well, I think a lot of it has to do with the uniqueness of this great brand. Wingstop is the largest national fast casual chicken wing player in the country. Over 700 locations and 97% franchised. We really have a unique concept and a great growth story. In fact, we have all the characteristics of fast casual growth in the restaurant sector, and we couple that with the cash flow characteristics of franchising. And I think that's something that's of great appeal to investors.
All right, you mentioned the 745 locations, but you guys plan to open up 2,500 just in the U.S. alone at some point. How are you going to make that happen?
Well, we're targeting long-term growth rates of 10% plus annually for the long term. And over time, we'll continue just to invest in new restaurants and bring new franchisees on board in new markets and existing markets throughout the country on our way to 2,500 domestic locations targeted.
All right, and what about globally? Do you have plans to expand locations overseas?
We do. Today we have Wingstops open in 6 countries around the world, and we're starting to establish a presence in key geographies around the world, including Central America, Southeast Asia, as well as the Middle East, North Africa.
All right, and for investors who want in on the stock in the larger fast food space, what's your advice to them, especially as Bojangles' IPO last month? It also priced at $19 per share and is now trading around $26. So there seems to be some attention on this space.
Well, I think investors look for the characteristics that Wingstop brings to the table. We have a very mature brand at 700 restaurants in the U.S., growing to nearly 2,500 long term. We have a very attractive franchise model and growing aggressively. In fact, in the first quarter alone, we grew our domestic store count by 18% plus. So I think investors are looking for growth, but I think Wingstop brings something unique in the franchisor characteristics of converting almost 94% of EBITDA to cash. And I think those are the types of things that become very attractive for them.
All right, Charlie Morrison, the CEO of Wingstop. And again, the stock is up 60% after its IPO debut Friday morning. Thanks for joining us.
My pleasure. Great to be here.
I'm Scott Gam, and you're watching The Street.